Hello and welcome. Yesterday, the European currency gained value against the US dollar as expected. Russia announced that massive military exercises in Belarus aimed at protecting the borders of their union state from external aggression would end on February 20, noting that its troops would return to home bases in Russia. This news led to high demand for risky assets, including the euro and the pound sterling. US stock index future also responded positively. In the first half of the day, overall market sentiment was bullish. The focus of investors was the ZEW economic sentiment results in Germany and the euro area. The data turned out to be rather upbeat. This indicates that the European economy continues to recover. In the second half of the day, the United States reported statistics on fourth quarter GDP. Economists expected a 0.3% quarterly rise and a 4.6% year-on-year increase, and the indicators were in line with their forecast. Then investors shifted their focus to US producer prices. The producer price index rose by 1% in January, beating analyst expectations, and 9.7% for the 12-month period, and later just off the record high. As a result, the US dollar advanced, but they come under pressure again. Today's macroeconomic calendar includes data on British consumer prices, inflation. Economists predict that inflation will slow down by 0.2%. This will have a positive impact on the country's economy. In case inflation continues to rise, the Bank of England will most likely consider a more aggressive rate hike. This, in turn, will support the British pound. In addition, today traders may take notice of industrial production in the euro area for December. More attention is likely to be paid to data on January industrial production as well as retail sales from the United States. Retail sales are forecast to show a dramatic uptick. However, this could cause mounting inflation pressures and borders steps by the Fed. All these may result in a stronger dollar against the euro and the pound sterling. Besides, market participants are awaiting US Federal Reserve meeting minutes to be realized today. However, everyone knows the position of the central bank. Thus, the news will hardly have a severe impact on market sentiment. From a technical point of view, the levels of 1.1366 and 1.1325 act as resistance and support respectively. I think the euro-dollar pair will probably try to break through 1.1366. If the price tests this mark and consolidates above it, a strong buy signal will be created. In this case, the way to the level of 1.1452 will open. However, much will depend on macroeconomic indicators. If pairs are able to protect 1.1366 or the price forms a false breakout at 1.1406, the volume of short position will increase. The principal task of bears will be a return below the area of 1.1325. If bulls attempt to build a new lower boundary of the ascending channel, a false breakout at this level will create a buy signal. If the price fixes below 1.1325, it will be possible to open short positions, counting on a decline to 1.1283 and then 1.1235. If minutes from the Federal Reserve meeting provides us with any new announcements, the downtrend initiated on February 10 will most likely continue. Long position can be considered at 1.1283 amid a false breakout or at 1.1235 on a rebound. As for the British currency, it's worth paying attention to its reaction to inflation data. Currently, bulls are actively protecting the round level of 1.3500. Today, the focus of market players will be on 1.3528. A false breakout at this mark will create a strong buy signal. Of course, bulls need to drive the price up so that it could rise above 1.3565. If the price continues to move along the lower boundary of the sideways channel, the pound sterling may come under pressure. If the price breaks above 1.3565 mark, the British currency will extend gains, approaching 1.3602.